Ever tried to rent an apartment, get a credit card, or even buy a car, and suddenly everyone starts asking about this mysterious number called your credit score? You nod along, but maybe you're thinking, what even is that? And why does it have so much power over my life? Well, today, we're going to break it all down in simple, easy-to-understand terms. Stick around because this number is your secret weapon in the world of finance. So, what exactly is a credit score? Think of it like a financial report card. It's a 3-digit number, usually ranging from 300 to 850, that tells lenders how trustworthy you are with borrowed money. A higher number basically screams, "Hey, I'm responsible. I pay my debts." This score is calculated based on your credit history, which is just a record of how you've handled money you've borrowed in the past. It's not just a random number, it's a summary of your financial habits. Now, why should you even care about this number? Because it matters. A lot. When you apply for a loan, lenders look at your credit score to decide if they should lend you money at all. But it gets better. Your score directly influences the interest rate you'll get. A great score can save you thousands of dollars over the life of a loan because you'll get a lower interest rate. We're talking about huge decisions like getting a mortgage for your dream home, financing a new car, or even just qualifying for a premium credit card. On the flip side, a low score can make all of these things more expensive or even impossible. It can even affect your ability to rent an apartment, get a new cell phone plan, or in some cases even land a job. It's a key that unlocks a lot of doors. So, what's the secret recipe for this magic number? Let's look at the most common model, the FICO score. Picture a pie chart. The biggest slice, a whopping 35%, is your payment history. This is simple. Do you pay your bills on time? Every single time? Late payments can really hurt your score. The next big slice, at 30%, is something called credit utilization. This sounds complicated, but it's just the percentage of your available credit that you're actually using. For example, if you have a credit card with a $10,000 limit and you have a $3,000 balance, your utilization is 30%. Keeping this number low is a very good sign to lenders. Then we have the smaller pieces of the pie. 15% is the length of your credit history. The longer you've been responsibly managing credit, the better. This is why it's often a bad idea to close your oldest credit card. 10% is your credit mix. Lenders like to see that you can handle different types of credit, like credit cards, a car loan, or a student loan. And the final 10% is for new credit. This looks at how many new accounts you've opened recently or how many times lenders have checked your credit. Opening too many new accounts in a short period can look risky. All right, you're probably wondering, how do I find out my score? The good news is, it's easier than ever and often free. Many banks and credit card companies offer free score tracking right in their apps. There are also great free services like Credit Karma or Credit Sesame that give you regular updates. For a deep dive into the details, you can get a full, free copy of your credit report from all 3 major bureaus once a year at Annual Credit Report. Calm. Checking your own score doesn't hurt it, so check it often. So you've checked your score and maybe it's not where you want it to be. Don't panic. A credit score is not permanent. You can absolutely improve it. The number one rule is to pay all your bills on time, every time. Set up automatic payments if you have to. Next, focus on that credit utilization. Aim to keep your balances below 30% of your credit limits. If you can get it under 10%, even better. Don't go on a spree of opening a bunch of new credit cards at once. And remember what we said about credit history length? Keep those old, no annual fee accounts open, even if you don't use them much. Their age helps your score. Your credit score isn't just a number, it's your financial passport. It can open doors to amazing opportunities or hold you back. Understanding and managing it is one of the most powerful things you can do for your financial future. If you found this video helpful, do me a huge favor and hit that like button. And if you want to dive deeper into building great credit and mastering your money, make sure to subscribe so you don't miss our next video. Thanks for watching, and I'll see you in the next one.